Dave, the rents in our area are so high, so much higher, that I can buy a house so much cheaper a month. Not true. You're not comparing apples to apples. At least over a period of time, it cannot be true economically. And let me walk you through why. Because it's a basic concept. But, again, this is a thing where we get scope creep, a thing where we get justifying, rationalizing buying a house when you're not ready to buy a house, or buying a house you can't afford, or buying a house in a situation where you shouldn't. Okay, I love home ownership. I always believe long-term owning a home is one of the best plans you can have long-term, but you need to do it in a wise way so the home is a blessing and not a curse. And this stupidity that's out there in the culture, including in some of the wonky think tanks, it's like, oh, home ownership is down. Americans are, the wealth inequality gap is widening. It's difficult to buy a home. Yeah, that's all true, but broke people, when they buy a home, aren't blessed. It makes them broker. That's why they call them mortgage brokers. And if a whole bunch of broke people buy a house at one time, you could bundle it and sell it on a hedge fund, and later on as a regular mortgage block, and actually crash the whole economy back to 2008. Does anybody remember? So it is not a good policy decision, not a good macroeconomic decision to force people into buying homes, or to encourage people to buy homes when they are broke. Now, once you're ready to buy a home, though, and you're looking at rents, and you say rents are, $1,500 a month, but I can buy this house for $800 a month. That is just not true long term. And here's why. It could be true for a moment in a boom town where something's going on, like they struck oil. Okay? I mean, you get in one of these boom towns, you could have that happen. But eventually, a supply-demand curve in economics will take effect. And here's why. Landlords want to have renters, and when there is an abundance of renters willing to pay ridiculous prices, what they do is they start building rental property, or buying property and turning it into rental property. And so if there's a house on the market on a street, and an individual can buy that house and it's $800 a month, or an investor can buy that house and it's $800 a month, and he can rent it for $15, and there's an abundance of renters out there, is the reason the price has driven up. There's a shortage versus the demand. Anytime demand is higher than supply, prices go up. Okay, when there's a shortage on something, that's when prices go up, in other words. Okay? But what happens is the shortage corrects itself very quickly, because those of us that are investors, we want to tap into this hot rental market. And so we go buy a bunch of property and turn it into rental property, or build a bunch of property and turn it into rental property, which raises the supply back up, thus the shortage goes away. So over time, rents are not going to be double prices of a house price, of a monthly payment on a house, because investors that are willing to borrow money, or willing to pay cash like I am, will buy enough rental property to take advantage of the great rates of return that an overpriced rental market will do, and it will cause the rental to come down or the value of the houses to go up. And so rent always approximates slightly above payments. It always does over time. And so when you call me up and say, oh, I can buy 50% of what I can rent, no, you can't. You're not comparing apples to apples in the neighborhoods. If you can buy, because investors would have already gobbled that house up and doubled their money. That's the point. And that does away with the shortage, which causes the economics to balance out. Now, again, there might be a 6-month period of time where that is not true. But long-term in Missouri, long-term in Boise, long-term in Abilene, that's what happens. If there is a bit of a jump for one reason or another, very quickly it will even out, and most of the time, it's already pretty even. rent is going to be slightly more than payments on average because investors require renters to pay enough rent so they can pay their payment, or so they can get a rate of return on the cash they have tied up, like in my case.